but let's not get ahead of things too far, and we'll see. Now, this OTE swing was a different one, and it was just drawn based on from here to here. So to me, we can still use it, but I'm gonna have to remove. Like, I think this entire time frame participants are at work. We will need to broaden our perspective. And there's still this yellow box here where we have a poorly auctioned area, where I think there is a potential for us to get down there, but that will not be in one session, and that will mean that we need to drop another 200 points. Now, if they get that job done and trade up down here into the close, which I doubt, but for me, it's an automatic buy to trade this back into premium. Let's see what we are doing at the moment. So you keep, like, when you're scalping, you keep looking for sweeps to occur. Okay. So when you have a low, you look for a lower low, and then you retarget whatever equal highs are back up there, or a bearish fair value gap that you can find on whichever chart you're trading. Now, for me, this is not like initiation to buy. And the thing is, you need to be very careful with scalping these things, because this looks like, it's a small move, but these are beyond my risk appetite in that sense. You have to be so precise in your entries. If you're working with like 10-point stops or something like that in my reasoning of things, please post that into the chat. So for me, always, when I see these equal highs, those are like easy targets for me to work towards too. Now, for today, I'm being very careful with that, because they can fall short, and they can also sweep it, and you need to draw down to a very low time frame to optimize your entries, which is quite difficult at the moment. So the best thing to do is just to wait until like bigger money starts coming into the game, and then trade what they are doing. But as you can see, whenever we have a drop, it doesn't matter what happens, we always sweep it out. And we haven't taken out the New York AM session as of yet. And I do think that will happen at some point, but we just don't know when. And like, if I was holding shorts from above, I keep asking myself, would you still hold them? And the answer would be simple, yes, because I would target these, the sell side on this side right here, with a possible continuation for lower. Now, when we go to the daily chart, there's something to keep in mind. Go back to the MQ Z 2020 or 2024. We should be in the process of creating a fair value gap, which is going to take a few days to unfold. And let me look to see. Oh yeah, that's what it was. I was looking for them to maybe potentially create it like this. So this candle would stop here with a wick. However, what got me on the bear side was that they gapped it up again. And as some of you know, whenever I see that they have a higher opening, I tend to look for downside, which was the reason also that motivated me to continue to look for shorts today and staying away from longs, because the problem is you do not know how far they can go. So I limit myself to the sessions in looking for specific setups to reverse. It doesn't mean that in London we can't go up, but like even Asia was quite clear what they wanted to do. And then this morning, the buy and sell zones that I draw out for you guys in the morning were not being respected. And if it goes out of bounds by one tick, even from what I draw out, I will not look for a long when New York opens up. Okay. So you see, you know, we disrespected this. Sure, you can trade it back up, but where did we trade to? See all these equal highs up here? So that was your long. Okay, we traded up in there, 9 o'clock. Okay, 9:30 opened up, dropped down, went back up, dropped down, went back up, and then 10 a.m. 10 a.m. it's because the first 30 minutes I'll let the market do its thing. I scalp for gap fills. That's it. But I will not position for the day. But as you can see here at 10 a.m., as soon as we start closing back underneath it, see here, 10, boom, and we trade back into premium in that order block, and that was your short. Let's see. When looking for higher time frame buys, do you look for close above, below prior candle bodies or the wicks? I prefer the wicks, and I also look for market structure shifts on wicks. And you have to be careful when we're that you don't go to a time frame that is too low. In that sense, it's best to maybe check the 15-minute chart and first try to understand what is happening there. Okay, because I'll give you an example of what happens. So, let's see if I can find you one. 5 minute is like easiest to do, but you have to specifically know what you're looking for. If you're doing that at 10 a.m., you would have gotten what? You would have gotten your market structure shift. For value gap would have been created, and where would have been your entry in that sense, right? But you have to look at it in context. Okay, so when do I look for these things? This is like when we're approaching either an open or a close, and I look for the highest up close candles right here. You see what happened here at this one right here. This is your first market structure shift that the tide is turning. Let me go back to the QZ contract so you can see what I'm talking about. So you get the low from this one, this low consolidation here. See how we broke underneath it. But the problem is that where are you going to short? Because you need to put your stops above here, above this high right here, right? And that's and for NASDAQ, that's a lot to do. So it's best to wait and see what will happen, because there's a lot of times we will trade back into that premium to do that. And that's why I trade the 1 minute, because like you will see that the bullish order block will get created in that sense after those stops have been taken out. And you can trade off that. And they weren't giving really clear fair value gap. Yeah, sure, there was an inversion right here in that sense. See that? But it didn't really respect it. Now your second market structure shift could have been here. Okay. And then you need to wait for them to trade into the first available fair value gap, which was right here. And this was your short. And then you could have placed your stop right here on top to your draw on liquidity, which was the new week opening gap. And for continuation, of course, for lower, but like you would leave your runners on until this objective has been met. In the move down here, could you have gone in? yeah, there was only one more other place where you could have gotten in on the 1 minute chart, and that was right here without chasing it. First bullish candle, trade back into it. But you basically, when you see these moves happening so aggressively, you just basically short any available fair value gap, but you have to be damn sure that you're going to the draw on liquidity, which was the new week opening gap, or, well, in this case, we bounced to the tick of the previous week high and held it for now. It doesn't mean that we can't take them out here still. So it's quite difficult. Hold on a second, I need to just check one thing. Let's have a look on ES to see if that was a little bit more clear. How that went. I don't even look. You know, ES is so messy. I just can't follow that anymore. You know, what I do now, and thanks to John, I do that, is that now I'm trading these spreads, and I just watch the SPX chart, and where I think we're at a high, open up put spreads, and or call spreads and those kind of things, you know, and then let it run. And I was in one from last night still, and I closed it when we were here and disrespected this ADR buy zone. So even there, you know, we went back up. Didn't even bother going to the midnight open on ES, and then dumped it, you know. So which is weak. Now, oh, look at that. Where did I draw that one from? I think it was from here. You have to look. Sometimes I need to look back. The last one held. Is that from here? Yeah. Okay. I drew it from this swing here. In that sense, I consider this done. See how? The reason is because we have a low here, and then our lower low. So this is like done business for me. Now, why is this midnight open here? Okay. And the buy side was here. Okay, we tested that. I see that that is going to be a low for today, maybe. Anyway, we're gonna have to see how we're gonna close up. I'm not expecting a bump into the close unless we take care of some unfinished business right here. Let me have a look on ES, see what we have. That one has been cleared, that one has been cleared. That one has been cleared. That has been done. The only thing we have left is this. Okay. Marked as sell side. So close, right? 3 points. Okay, let's go back to MQ, see if we swept that AM low. It's at my alert. So notice how, you know, your longs are it's just no juice, right? It's like, sure, we bounced off this, you got 80 points out of it on the retest. And look, when I took this long right here. And the reason is because it was a London close and I was looking for them to take out these highs. I got out before that. And why did I take that long? It's quite simple. You see this body right here? That's an order block because it was closed underneath a wick after those stops have been taken out. So I had a limit order set on here and my stop was right in the middle. And my drawn liquidity was here. And it has to do with the time of day that I'm trading and looking for these mean reversions to occur. And it needs to have enough points for me to be able to grab them. And in this case, I think it was like 80 points, something like that. I did it in a combine but 70. I think I got out here. Now, are we seeing that same type of pattern in action here at the moment? No, we're not. So, we're still in the downtrend, and these are just minor retracements back up to premium, and we're just unable to get above that new week opening gap. That's more visible on the 15-minute chart. We take these blocks off, you can see. And now we're getting bodies here underneath it. Well, and what is important for me for this close? When I see prices closing underneath here, which was the previous day low, that's no bueno. Okay, that's like basically a market structure shift, which means I will most likely buy the close, however deep they go. And what we're going to be looking for is for them to, let's pretend that they're going over here, to trade back into that and then sell it back. Did any of you see the video that I posted into, I don't know where, let me see, on a macro channel or something like that? It talks about election volatility and how to trade it. And we are currently in, it doesn't matter who becomes the president, really. Whatever shit show it's going to be for either side. But there is some good points he made in that video, and that we're in a specific cycle. And I'm very curious to see if that's going to pan out, because I think we need to cut out a lot of noise that we're going to be hearing around us and stay focused on what the price action is going to tell us, and not trade on what we think. And I need to be very careful of that also, because I do have a strong concern if certain things pan out where I think things are going to go, while I should tune that completely out and not have a bias based on whoever's in that office, because it doesn't matter. Hold on 1 second. But that video is good to know what the cycles are and what historical charts have shown. And of course, it can diverge off of them. But we have seasonalities where we can work with in different ways. Let me see. Do you guys have any questions specifically on what I have on my charts and what you've seen and what you'd like me to cover? We chart the first day of October, and yeah, I used to trade or keep track of the true month open in the past as well. But in the end, how do I make something like that tradable? And I'm starting to question the midnight open also, because I see that we're getting lots of misses off of them, and yeah, it's something that I try to keep track of, but the thing is that I don't need it in my scalping strategies and those kind of things. So let's see, could you do a quick short term on BTC? Yeah, sure. Yeah, Bitcoin had a nice long setup. So when
when I see those kind of things, I think to myself, like, "Fuck, why not take it?" I don't trade cryptos anymore, but at this higher time frame target, I think we've met all of them. I think, yeah. So I have higher targets for Bitcoin. Let me put this on a weekly chart. I think we're going to be targeting 73K at some point. And the reason is because we were holding this monthly fair value gap. And it's quite simple. They've been accumulating longs from here. So any dips we're getting, those are opportunities to look for ads to trade towards this target right here. Basically the same thing what's been happening with NASDAQ, right? Of course, everyone's freaking out when they're seeing this, but in the end, where's going to be the final goalpost? So let's have a look here what they did today. We take these indicators off and gaps, and we'll work our way back. First of all, the 3 months, it's quite clear that it's bullish. And even if I take off this monthly fair value gap, and we'll just take the quarterly, see how they just respected the mid of it very nicely. So, and this is the fair value gap, the breakaway gap that we use once we break above these highs, right? So it's quite simple. So it's like these higher time frame things are very easy to spot in that sense. So and then we go to a lower time frame and fine tune these entries again. So now I'm already narrowed down into where a potential accumulation zone is here, because we broke above this high right here, see, with a close, and a fair value gap was created, which was the monthly fair value gap. Now this chop shit, yeah, you have to deal with it. It's just, crypto is the most manipulated instrument there is. So now the monthly low I always keep track of and the buy side. Now, when it came to this right here, and what caught my attention is the previous month open was held, because the current month opened up, and the first thing what they did was drop it down. Now, whenever there's an open, I look for accumulation above or below those levels. And now, if October opened up bearish in that sense, I'm looking for a turn always around the 10th or 12th of the month, which was aligning perfectly again with this. And what happened on the daily chart was quite simple again in that sense. Once we broke above this high right here, this one, okay, there was a fair value gap that was created, and it was quite simple that this was your accumulation zone to target the buy side on the monthly, with your runners to target these highs up here, okay, and the all-time highs up there. Now, where can it fail? It can fail at the mid of this wick right here. I need to go to larger time frame, I think. Well, there's no order block right here, right? The only order block that we're having right now is this one right here, which is on the daily. See? And we rejected it 1, 2, 3, 4, and then drop down, and then that's fine. Sure, there's something to say that this is an order block also, but we're already not respecting that in that sense. And once we break above here in the, with these closes, we keep looking for dips to buy. Now on the daily, we're in the process of creating another bullish fair value gap. So what will we be looking for? We're going to take note of this. If they close above this high of this monthly buy side, we're going to look for a trade back into that, and keep hitting that map until we reach the target. Now let's go drop down into the 4-hour chart to see what happened. I think it was an hourly where I saw that long. Yeah. So this is what I mean. You have this high right here. You see how we broke out above this high, and this was your hourly fair value gap that was there. And it was in the upper half of uh, this daily fair value gap, which is bullish, because you don't want to see, sure, it can wick through it, but you don't want to see bodies below the mid of it, because that is already showing you a sign of weakness that it could go down further. Now, sometimes they do drop down to the lower part of it as a manipulation leg, and then or they continue up higher. Now, here's the same story. You have those highs. Notice how the fair value gap that gets broken above it, right here. Now, technically, the problem is with these fair value gaps, especially when there's, this is like 400 points or something like that. You would need to place your trade like this. Like that, with your draw on liquidity. So you can go for a 2 to 1. There you go. Oh, it would have been a nice trade. And let me see, John, are you finding other times are working better to anchor besides midnight open? Well, midnight open will always be my over-under, right? Except for today, like typically when I see Asia and London sell down, I would look to buy the New York Open. But the problem was today was that they went back up into premium. And then we can use that New York Open as your over-under, for example, But let's say if New York opened up at the lows, near the London lows, then I would have been bullish on the session or even on the day, and that didn't happen. So I do use different levels at different times, but like you've seen me doing that before, that I do it every 4 hours, where I look for an accumulation, manipulation, and distribution in that 4-hour time window. So on the first leg, it's going to be very simple in that sense, that we're going to see, like in this case, let's have a look what's happening here at the moment. Okay, so we have the 4-hour opening. Like I said, my drawn liquidity is down here. So I'm looking for the first hour to be the manipulation leg, which worked out nice. Okay, so what happened? Okay, we opened up at 2 p.m. We went up. Did we take out these stops? Not yet. Let's drop down to a 50-minute chart. This is just messy. This is like barcoding crap. I don't like trading that shit. But nevertheless, you're looking for a rejection at some point here to occur. Try to find your entry. It's difficult. It's not easy. When you drop down to lower time frames, let's see what happened. They opened up, went up, dropped back down. So that they're barcoding because they're accumulating positions. The only issue is that we're running into is like it can be bullish, because I would have loved to see them take out these highs right here. So I suspect what they're doing is they're going to drop this shit down and then rip up at some point after the draw on liquidity has been completed. And from there on, we'll look for setups for reversal patterns to occur. So what would that look like? We want to see them really flush out these guys right here. Okay, we want to see like a giant red candle going down, create a fair value gap, bearish, get everyone trapped, opening up puts, and then what will happen is they will do something like this. Okay, take out these guys. You will see them taking out these guys right here, and then potentially drop and do something like that, and then probably take out these guys also. That is what I expect for the Asian session at some point. Okay, we'll see. So
that can show you here the power 3 on. Okay. So the anatomy of a candle, like we've talked about that many times if you've been following me. So look, we look for a high, a low, and a close. Go here, king chart. Take everything off, move the drawings, and we'll put on a daily chart. What would that look like? So what will power hour look like today? Very rarely you will have a candle close at either the low of the day. Okay. If that happens, that's when I buy, because the next day will be a 20% retracement of whatever that move is. Or they can even go back half the move of what they've done. Okay. So let's make this a big, 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 and offset it by 30. Okay. So just by looking at this candle right here, we can draw a fib from this high to this low, whatever that low may be. And we can figure out where 30 and 20% retracement levels are. Okay. So whatever happens with this low, I expect price to close around 20,400. Now let's add where the previous day low is. Technically, if this is going to be the low of the day, we could see price move back to this level here and close here. Because what you normally would see is the second day also, so you know what the previous day looked like. See, whenever we make a high, it retraces back 20% of it sometimes. Unless, like, smart money is trying to get, like, higher positions to short or something. So let's grab this range right here. There it is. Reverse. I think, Corey, you asked me, they didn't close at the 20% or didn't drop down. Well, the first thing what they did the next day, or right after the futures opened, was retrace back to those levels, right? So getting all kinds of alerts. Give me 1 second. I think ES made a new low. Let me just check real quick. Yes, they did. So you see, ES is taking out that sell side that I was referring to. Already by looking at this, the draw on liquidity is over here. The leader in range low on this side. But let's see, maybe they will bounce from here. But what you want to see from here on is a continuation sweep. Really take out these guys from here. And we can move the goalpost down. Maybe it's down here. And these are going to be an ugly, ugly hour. And NASDAQ is holding up. But they will get dragged down at some point. Let's watch. Is everything clear for you guys so far? Do you have any questions? Some mumbo jumbo I might be talking about? Okay, so when it comes to the anatomy of a candle, you have an open. Let's pretend this is a bullish candle. Okay, you have a manipulation leg down, expansion, and then a close. Well, you can even calculate how far they can manipulate down in that sense. Okay. So what does this look like in the entire move? It's like this. So they will close always between the 20-30% in this zone most of the time. Sure, they can stay at the top sometimes, but then a lot of times you know it's like an easy short scalp back to that level the next day. They can even drop down to the 50% and it still be bullish or bounce from there like that and then close. Then have that whipsaw action. That's why I have those pips always on. Let's see. Sweep it. Do you guys hear those sirens? Just so I know how much background noise there is. Okay. Okay. Some other things to keep track of, because like what I just showed you on, for example, a daily chart or what a candle looks like. I work with the power of three. So whenever we're following into a trend or something like that, for me, it's quite simple. For tomorrow, what I'm going to do is keep track of this range, and I'm going to have my premium and discount levels. You can draw an optimal trade entry based on what we have right here. However, I wouldn't count on it in that sense because yeah. Like if we're really bearish, we won't have to trade back up to this zone right here. So we're gonna have to look at this open right here and see if we have an order block that is going to block us from reaching up further. But premium is basically the range that we've had and the midpoint of it. So when you're looking for shorts to take the next day, you would look for either a session premium, which is an Asia session, or a midnight open, anything above the midnight open, or on the previous day range, the mid or above it. Now, in this case, like we have a higher time frame narrative that we could still go to the all-time highs on NASDAQ, right? It's also earnings seasons, and you know, if people missed out on this move, smart money is just finding a way to get in. And yeah, we're just gonna have to wait to see when these guys get swept to see what happens from there. Just a little bit more room to go. And that's what I posted in the Discord earlier. I think these levels that I was watching. These are 314. Or did I delete it? Yeah, 314 sell side. Yeah. Let me see. Any of you have any questions? So you get your premium and discount zones fit on a 1 hour candle. Yeah, you could use them on a 1 hour. Like every candle has its premium and discount zones, right? And that's the difficult part sometimes about it into interpreting these lower time frames, because like we keep trading into a premium, but like I also take the wicks into account, because like if I'm bearish or something like that, and like you're scalping something, you could also look at wicks, 50% of the wicks right here, and you make that white so you can see it, and you can see that this one traded right into it and then drops. No. Um, what is premium discount in that sense? Whenever you have, like, let's say a swing right here. This is a clear swing. See how we're trading to the 50% mark of it? And then we drop. Now, if we get this swing right here, see that? This swing, 50, drop. Does it make sense what I'm trying to show you by any chance? Or is it like really mumbo jumbo, sort of? See that? This swing right here, 50%, drop. Okay. Now, we're not having it here at the moment, I think. Yeah, well, sort of. So you see how that practically works until it doesn't? Now, it also works the other way around, when we're bullish. And it's tricky because, like, when is the right context to get in? Because, like, you see, you have a swing low and a swing high. If you're looking to long, you wait for discount. So, like, even if you were wrong on this, you still got plenty of points out of it, And that's why my goal is just to grab 20 points and be done with it. Like, lower your expectations. Like, this gives you exactly 20 points. See that? Not once, 2 times. Now, if you want to buy a deeper discount, you could also do it. Now, let's say this was you were bullish and you're just waiting for a good discount to buy, okay? And you just bought the OT on the first touch, right here. Set your limit order here, okay? Your stop is right here. Trade would look like this. Can it fill? Yeah, sure it can. But, will it? I mean, if you're getting 33 points out of this, why not? Just retargeting these highs up here. Okay, and now 20 points. You can narrow your stops even further by just using these. Well, next to that, what was right here? The fair value gap. Why it's one? Because we broke out of it, So you see how we were respecting the mid of that fair value gap with the bodies? Way to do the damage. But, like, even if you would have bought it here, okay, your stop would have had to be a tick below here. Let's see, did we sweep it? Yeah, no, that's good. This is what we like to see. What time is it? 9 o'clock. Okay. So, since we made a new low, let's just create a plan on where we can retrace to. Take the other candles off. This shit here. Take all that crap off. I'll take that buy side. No, I'm gonna leave that one. Okay. What I'm not liking is that I'm not seeing bearish fair value gaps overlapping these lows. So it looks like they're rebalancing and continuing with the selling. So there's no potential reversal reference point for me to work with at the moment. So I do not expect price to retrace up at the moment. But like I said, I posted there, I was looking for them to press it down into the close. And then where you could buy it up for Asia and maybe London and then sell it down again. Now look here, we're getting a bearish fair value gap here. We need to watch very closely what will happen here. I expect price to trade back into this at some point. And let's just draw a quick premium discount on that. Okay, you see how this 50% mark is already showing us. If let's say you wanted to join the trend and it's creating a swing low, this is your place to add your shorts, however low we may go. So this move needs to be completed. So on the first green candle or reversal candle, we'll start looking for that to form. So let's say if I wanted to scalp long, I would definitely not pick the bottom here or something like that, but I would use this fair value gap here as my primary target. First of all, the way that it's moving now, it's like a mechanical move here. So they're like really shoving it down to get an objective done. So the way, by the looks of this, it looks like we're gonna get a potential Tuesday low. Which is good for the rest of the week, I guess. Very mechanical. These are just algorithms. And see all these imbalances right here, it's just going to cascade at some point. Just like how we had them on the upside. See how they're also doing it on the bear side at the moment. So if they leave these behind the way they are at the moment, this is just going to need rebalancing. And let's see what the premium discount levels are. See, this one lines up with an optimal trade entry for now. So I look for price to revert back up, but let's just drop down to a lower time frame and we'll see if we can get an inversion to become support. I'm not expecting that to occur now, because no reason for them to do it at the moment. And you can see on the 15-second chart how we keep trading back into these fair value gaps, retesting, and then set it back down. See how they get created? And then poof, they go back down. How it's done. There you go. And this is what I mean. Now they've been rebalanced, and you see how they traded back into the premium really quickly. Is that clear for you guys that what I tried to explain? Good. Now it's becoming really interesting for me in that sense. We're going to have to see how we're going to behave around this. What I like to see on these 15-second charts is for them to scoop price down really aggressively down into these fair value gaps. And like when you're aggressive, let's just try this out on paper for a minute. So is it connected? Let's pretend we bought here. One, go right here. So leave your stop right here. When aggressive, you can leave your stop right here. Sure, it can fail, but you see, when you're getting those 20 points, and as soon as it goes in your favor, just raise your stop. You know, typically I would like add like a 3 lot or 4 lot and I would have scaled right here because you see all they're doing right now is taking out these stops right here. But nevertheless, like you take 3 points out and it's a win, right? Um, the trend is still up. There's no reason for me to shut it down. But the only issue is that this was your premium zone because it was an optimal trade entry for your short for a continuation move down. But I think this could be it. We're going to reverse this. And then if you drop down to a 1 minute chart, you want to see the same thing, except it takes longer to unfold. So we have this bearish fair value gap right here. And right, this one that we drew out earlier, you want to see body closures above it. And then you can use them as potential support zones to trade off. Okay. I think we have a green one right here. This one's untouched. Let's make this one green. You always get an entry, even though it looks like you've missed it on these lower time frames. Okay, so we're going to put in a buy order in here and just wait and let it come to us. We stop right here. Now, I wouldn't take this because of the time of day, fortunately, because what I would like to see personally is, like I said, I want to sell them down into the close, but this is just showing you what is premium, what is discount, and how's price interacting with it, and when did the market structure shift in that sense on the lower time frames. And then get filled. Let's say I got filled on it. I'll leave the stop here. Like this is your optimal trade entry zone in that sense. And it runs all the way through here. And we'll target those highs up here. But I expect this to fill, by the way. So I'd like to see a lower low. I'm more of the camp where they will continue down further and really like trap everyone and then bump it up into the Asian session. But we'll see how this works out. It's a good try. Not all OTEs, by the way, will work in that sense. It's the higher time frame context that's leading in that sense. And if you manage your risk accordingly and you keep doing the same thing, you'll be right more than wrong. So the problem is that a lot of people just give up and in a loss, and then they don't recover from them because they give up. Now, technically, I needed to put my order right here on this level, and I just moved it up. But you see how the first reaction off of it is always quite okay in that sense, where you could leave like your stops really tightly underneath. I need to respect the mid of this wick. Let me take these things off for a minute so we can have clean charts. So you can see what is happening with those fair value gaps. This is that inversion fair value gap, and if you're aggressive, you can leave your stop right underneath there if it goes against you, if it's less risk you want to take. Because technically, the body should be respecting the upper portion of this. Now, in this case, we got stopped out. That is fine. We were expecting that, weren't we? But if you want to put on more risk, you can leave it just below here. And the trade would have still worked out fine, I think. But we'll see. I do this by naked eye in that sense. I'm drawing these out for you guys because, like, for it to be like really strong, you want to see it making new highs and preferably close above like whatever swing there was. So for a quality long, you want to see it really like close bodies above where they started to break down. Okay. And this is your breakaway gap right here, which was also that short entry, what I told you earlier about. And with the bias that we should continue lower into the close, right? So now I do not know what those algos will do in the last 10 minutes. So you have to be very cautious into continuing holding this overnight. It's not something I would do. And we'll come back to that story of where we have the daily close or the daily candle right here. And let's just draw that back up from the high to the low, where the 20% retracement level is, which is 20,344. However low we go, we'll move the goalpost, right? Since we have this low right here, so we'll see. But if we close here, for me, that's not a good sign for bulls, let's say, for the time being, because we'll probably get another leg down, but you'll see us trade back up into premium in the Asian session, potentially continue the move down. Let's see, if you wanted to swing positions overnight, would you use 4-hour candles or longer candles? Well, first of all, let me be clear about something. I don't trade overnight often. I like on these sell down days, it depends how we close. If they like really press it down after the close, after cash has closed, I mean, I will buy that at the end of the Globex session. Okay, so let's say they close it at 3 p.m. At a low, and then after the close, they continue to press it down. That's a mechanical move for me that I would buy into for the Asian session, and you get some nice returns from that. But that happens maybe once a month, maybe twice a month, or something like that. So let's see. See, it was paper trading, the Hang Seng. Same idea, I think. I tried. I don't know what this is. Right here. With the help. Let's have a look real quick on other markets. Yes. ES is about to sweep the previous day low, I see. Well, that was a draw on liquidity. I don't know why I drew that line there. I didn't know the low from the previous day was here. 58.60. Ah, right here. So Nasdaq is weaker than ES still. Take this shit off because I don't want those labels on my chart. So you see, there's still no power. No buyers are participating. So any move up, you can treat it as a rip to sell. It just might park it here. Let me look real quick on my chart. What else do we have? I think we have an order block also on the higher time frame somewhere here. Now, when I look for these optimal trade entries, I like to have an overlapping bearish fair value gap with them. So we have one here, but like we're in such discount at the moment, it's not, I wouldn't even consider going short. You're better off looking for long. But if you would, your stop would be here, right above this high, which I don't favor at all. If we close above here with a body in 15 seconds, preferably you want to see them taking out these highs, create a fair value gap, and then we would look to trade back in, and that can also be your long. Then again, it's like we're keeping track of that 20% retracement level of the daily candle, right? We were talking about this long right here. It is your OTE. They're not going to respect it, but your stop would have been still good. Has to fit your risk appetite. So now we're closing above here with a body. I want this 1 minute candle to close and create another bullish fair value gap. But you want them to close above this high. There you go. We should get accepted back into this range. But remember, this is your primary target. Any questions? If it goes above prior body low, then the price target would be the equal high on the daily. If we close above prior body low, you mean on the daily chart, optimize? Let me put another daily candle here. I mean, if you close here at 432, well, I'm not even looking at that at the moment because, like, first let's see where they close out. This is your premium level right here, that wick on the daily chart. So, you can expect them to trade back, but it's also a place where you can look for rejections, right? So, because technically, how did I say this? Look, this is the highest up close candle that is here right now at the moment. Okay, I think. Let me have a look at another day. Yeah. Okay. So if we move away far enough from this, then this can qualify as an order block on a daily. So you can keep track of that level because I'm sure we will go back and test it, but also keep track of your premium levels because like we can go a little bit above it in that sense, but also keep track of that wick that is on the previous day. Okay. Is that clear? Oh, yes. Okay, let me have a look. Take that one off. It's not necessary. It's not respecting it. So I don't know. I just don't like that they didn't take out that low. Ooh, Okay. That is good to see. And you know, let's just keep it on closures, and like you can draw the consequent encouragements also on the wicks on the daily count. Like ES is respecting it now. There's just so much to keep track of, but just keep it simple. That's divergence, peekaboo. I mean, they'll take them out at some point. My power of three indicator is a paid indicator. Yes, it is. But you have a free one that is available, and it's called Higher Time Frame Power of Three by 2 degrees. And there's a free one also available, and that one is called Higher Time Frame Candles by Fadi. And that's all you need. You don't need to pay anything. It's available. And that one will draw out. Like I can't work with that one because like it's just too much shit, you know. But it does give you a nice overview on what each time frame is doing. So you've got the 5 minute, the 50 minute, the 1 hour, and the 4 hour. And the good part about this one is that you're able to make these wicks white and the wicks a little better, and the fair value gaps, for example, yellow. And we'll make the imbalances red. So it would look like something like this. Now, what is important, how can you use this to your advantage? Is like, for example, if you're trading on a 1 minute or a 15-second chart, at all times you'll have on one chart, you'll be able to see the different fair value gaps that are available. The only thing you have to keep in mind is that you don't mix up all these different charts. So you can see that all we're doing really is trading into a bearish 5 minute fair value gap here on ES, which is your discount zone, right? Your premium zone, sorry. From this swing high to here. See that? For continuation with that. Now, this is the tricky part. On the 15-minute chart, you have fair value gap right here. Even though in the 5 minute we rejected that one, you'd also expect price to trade back into a 50-minute fair value gap to continue down. The same would go for, which one is that one? 1 hour. Well, actually, the hourly you won't know for another 30 minutes. Okay. But it's a good way to do it. I would say, like, put it in market replay and see how it interacts on the multiple time frames, where you'll be able to see how all these different candles work and they interact with each other. Because something on the 5 minute might look very bearish, while or the opposite, or bullish, while it's actually bearish. Go back to NASDAQ real quick. Like I said, we keep moving the goalposts. If we get lower lows at the close, we'll keep track of that 20% level, like I told you. It depends on how far we go. You guys have any questions? Is the price is already at 180 RES? Do you expect it to go much lower? Oh yeah, well, ES didn't take out the previous day low, right? So that's the bias. So draw liquidity. Like for quality longs, you really want them to sweep, and preferably do it in sync with each other. But as you can see, ES a bit stronger than Nasdaq. And the Russell's outperforming everything, right? So there's some type of rotation happening, I guess. And they are selling it down, but let's have a look. So green on the day, it's insane. What the fuck? For the Russell, a target of 2305 still open. Sort of looks like Bitcoin. Thing is that you can't. Yeah, who's able to stand the heat? Like talking about rug pulls. On the daily chart on Nasdaq, we're gonna keep track of this level right. Someone really wants to get in. By the way, on Nasdaq, there is 203 is the next area that we want to keep track of. Oh, looks I'm gonna get my pressure down, right? So you see how this is the same type of behavior that we're seeing here. Keep creating and pressing your fair value gaps. Same, you can expect the same type of price action occurring soon. I'm just gonna have a look at one thing real quick. Take a look. I think I need to get my shopping list ready. I'm gonna remove everything off of here. Yes, just took up stay low. And things should start turning back up, I think. Have a look. I didn't really take it out. Tagged it. The NASDAQ. See if we're getting the reversal again. Move our low posts. Here. So this will be normal retracement back for close, if this is going to be the low. Let's have a quick look at viewer 0-day trader. It's could accelerate a little bit. That it's following this line is by coincidence. Okay. Look, these reversal setups. See, we're breaking these structures. Then again, boom, you buy these fair value gaps. Where did it go to? Got these equal highs right here. See that? This is just like typical for it to move. Put a fair value gap indicator on so you can see what it's doing. So this is your first 15-minute fair value gap right here. That would be your draw on liquidity. And these are all order blocks right here, right? Break above, retest these highs. You see that? Same here, fair value gap. Now these are all left naked. Expect price to rebalance them out again, but now if you wanted an entry in this, same story. See if we have draw on liquidity. Where's discount? See these vertical moves, you wait for it to come back into a discount zone. This is your midpoint right here. You guys have any questions? Would like me to cover anything? No. What I also like to do in the mornings, and I check the option flows, what's been happening on all these up days, is you see these weird strike prices get placed. And today that did not happen for the first time in a very long time. Well, the clothes is going to tell me the story, right? The body. Unfortunately, I won't see the body until I'm asleep or when I wake up in the morning. But whatever happens, I look for it to trade back into premium at some point. And for the weekly, yeah, it's to get a weekly bias, you need weekly closures. And we'll take it day by day. Because if we close below the previous day low, that's going to be a story for me um, in changing my bias to look for lower prices. Simple as that. Where was the previous day low on Nasdaq? Right here, right? So they need to do a lot of work. Really start getting above here. Change my tune to work out all these imbalances right here. But we shall see. Like I said, what I prefer to see is them selling it into the close and really press it down and get everyone trapped where we could mean revert it back up. Let me have a look real quick what ES is doing. $50. At 20% levels right here. Now we close back underneath here. You could use this one as your inversion as well, but you'll see that this one even comes into play again for a third time. Break back above, and then it's your support. See that? And it doesn't get more precise than that. When you break back above, you can use a fair value gap that was created here. Why? Because that's the one created the lower price. I'll be back in just 2 minutes.
All right. So we've got 10 more minutes to go. I guess we're getting that level already. In regards to the option contracts that I see popping in at the Asia low or either the London low. Someone slaps on specific set of calls in the option chain, and they coincide a lot of times with either the Asian low, which is the low of the day, or the London session low, which can also be the low of the day. So now we're trading into this bearish 15-minute fair value gap. What's going to be telling is where the body of that 15-minute will close. If it will close above 349 or not. Technically, this would be your short zone, but since we're already trading into a heavy discount and below previous day low, it's not a good area to take or initiate any position. Like I said, it depends on what we close. If they manage to bump this up another 50 points and close above previous day low, then I have to assume this could be potentially the low of the week. But that's only if we manage to close above this level right here. But it doesn't look like it. I wouldn't expect it. This is bearish fair value gap right here. We really need to see body closures on the 15-minute above here. But we still got 5 minutes to go. We'll see what they do. See in the 15-minute chart, if we got a close above this one, and that's the same story again, right? Sure, they will take out all these guys right here. You want price to trade back at least to mid this right here. This is your premium area again. If you're really bearish, this is the place where you would look for shorts. Right here. And for those of you that are able to trade the overnight session of Asia, look for the PD arrays or bullish or value gaps that you could buy, and you would need to target these highs right here. Okay, 450 approximately. Now, what typically happens after such a move like today is the next day usually we reverse it, or on Thursday, if it was a continuation move down, if we remain below previous day low, we would look for a reversal setup to occur on Thursday or on Friday. However low we go, you look for that retracement of the TGIF levels that I gave in the same way you would do for the daily, but then practically on a weekly. So this 5-minute closed above the 50-minute is already a tail sign, where I would think we would have some more upside potential. They don't have to do anything. They can just close it here because the job is done. Selling's done and no one's buying it. That's obvious. So I have no idea what these algos are programmed to do right now. They could pump it back up to previous day low, but we'll see. If they open up it with a gap up tomorrow, depending where the location is, I would look to sell the 10 a.m. And the opposite is true for if we gap down tomorrow. Well, we need to see what they do in the overnight. But nevertheless, this was a nice trade that you could have taken right here. Give you points. 50. You to continue to pump it. I don't think so. Got 40 seconds left, so unless they do one big green candle. $30 seconds. Did they close at 15 minutes above that? Yeah, be open for a drift up. Remember, Globex doesn't close for another hour. So we got a bullish for value gap on the 15-minute right now in development, I think. So we need to see if that's going to hold. So keep an eye on that 15-minute chart. If that continues and they manage to close Globex above 383, so alert, BDL, Monday low, and take note of this low right here. Mark that as your sell side. I do not immediately expect this to be traded to tomorrow in that sense, but be open for an inside day. With no clear direction. But who knows when Asia wakes up, what they will think, and we'll take it from there. And then when London opens up, I'll post my plan on what I expect to happen for the rest of the day again. Anyone have any questions before I close off? Yeah, anytime, guys. Well, good luck. Don't take any stupid trades. Just let them come to you. Make sure you have your areas defined and your risk defined, and then you should be okay. All right, catch you guys later.